Meta. Now, Meta stock's about to move huge before their earnings, okay? And let me explain why that is in just a moment. But I mean, obviously the stock just continues to roll. We're up another $3,000+ on Meta stock here today. It's extraordinary, just kind of the movement in the stock, right? From $88 back in the fourth quarter of 2022 to see where the stock is now, pushing 310 plus. It's been quite a move, but Meta stock's about to move significantly prior to their earnings, and the reason being is what it's about to happen, and this is, okay? So, I don't know if you guys follow me on Threads or not, but if you don't follow me on Threads and use Threads, definitely, follow me. If you don't know how to get there, go to my Instagram, okay? And my Instagram's linked in the description area. Check out my Instagram, and then you can go ahead and you can click the button for Threads once you get on my Instagram, okay? Which, by the way, if you don't follow me on Instagram, what the heck are you flipping flapjacking doing? Tesla and Netflix will report earnings over the next 48 hours, okay? Now, these stocks will move Meta stock. I can tell you that. These are also big weights in the Qs, big weights in the S&P 500. And at the end of the day, when it comes to Tesla and Netflix, they're seen as risk-on type stocks, right? Now, the way Meta's been performing recently is kind of in that risk-on territory. So in order for Meta to keep rolling into their earnings, right, which are still 1 to 2 weeks away, they need Tesla and Netflix to come through, report really good numbers, pretty good guides, and boom, and next thing you know, Meta's going to be pushing 350 going into earnings, if that was to happen. Now, if Tesla and Netflix get, let's say these stocks go down 5, 10, 15% on earnings for whatever reason, then that's going to hurt Meta stock and will likely be under 300 going into Meta earnings, okay? And then it will really be dependent upon Meta's earnings, where that stock goes from there. So that's an important thing to understand about this. These two knocked out of the ballpark. I could see Meta pushing 350 going into earnings, man. It's a possibility. But these ones matter in a significant way to Meta. They matter even to stocks like, obviously, Amazon as well, okay? Now, obviously, all stocks have a risk in the market. It doesn't matter what you invest in, whether you're in Tesla or Meta or Apple, any stock in the stock market has risk. Okay? So that's something important we have to understand. Stocks under $5 have more risk, though. Like a lot of these companies are just, they're down there for a reason, usually, right? Or they're very small companies that aren't as proven. So you got to understand, like, if you're buying stocks, and this stock's less than $1 a share. So if you're buying these sorts of stocks, it's coming with significant risk, right? These type of stocks should be viewed as speculative stocks, spec stocks. So, some people go too crazy in some of these spec stocks because of the insane upside opportunity, but you got to remember about the downside as well, right? And so that's where I always preach, GVD 1, 2, 3, growth stocks, value stocks, dividend stocks. And then if you want to throw a spec stock or two in your portfolio, fair game, but just make sure it's an amount that is not going to ruin you if things don't quite work out with that company, right? Now, in regards to this particular stock, they're putting up the numbers. We're going to go through their revenue numbers. We're going to go through the margins. We're going to go through the profitability. And this company is starting to flip over to that profitable side slowly but surely. And so that's very exciting. Now, this company also is a B2B company, so meaning they're selling to other businesses, and they sell to basically consumers as well. And this company has insane growth long-term, in my opinion, and they have insane growth short-term. And I'll show you the numbers that they just reported here. Absolutely shocking numbers. Now, in regards to me personally with this stock, okay, I'll tell you, me personally, this is a long-term speculative hold for me. A long-term speculative hold, right? I'm always looking at these things from kind of a 3, 5, 7 year out kind of perspective, right? And so if this stock goes up a bunch over the next month or 2 months, it doesn't matter to me. It's completely irrelevant to me, to be honest, right? Avant Brands, AVTBF, in regards to this one. It's a 12-cent stock. It's definitely under the radar type stock, right? Less than about a $32 million market cap on this one. So yeah, definitely going to fly under the radar. Now, you know what shouldn't be flying under the radar is the results this company's putting up, because this is one of the fastest growth companies you'll find in the market, literally, okay? Avant Brands reports Q2 fiscal 2023 results with fourth consecutive quarter of cash flow from operations. Record gross revenues of $9 million. That's a 101% growth versus Q2 2022. It's insane, okay? Positive adjusted EBITDA of $1.1 million. Positive cash flow from operations of $2.1 million. Fourth consecutive quarter of positive adjusted EBITDA and cash flow from operations. That matters significantly. Now, in terms of the CEO, Nort is also a risk factor for the stock, so we'll speak about him as a risk factor for the stock in a little later on in the video, okay? He says, "We are excited to announce another quarter of record revenues. Robust domestic and international demand for our product combined with efficient operations has allowed us to achieve positive cash flow and adjusted EBITDA. Moreover, the acquisition of flower group Okanga, I can never pronounce a lot of words properly, we know that, has substantially enhanced our ability to fulfill this demand and continue delivering strong revenue growth, he says. Now, check this out. These numbers are shocking. I mean, absolutely shocking numbers. Gross revenue of $9 million, which is a record quarter for the company. That's 101% growth year over year. The 4 most recent quarters have been the highest gross revenue quarters in the company's history, right? They're putting up the numbers. This matters. If you're ever going to consider a speculative stock, make sure they're actually putting up the numbers. Make sure you're not just buying on hopes and prayers that maybe someday they'll make money and maybe someday they'll have revenues or something like that, okay? A lot of people do that, and yeah, we know how that turns out, right? Total net revenues of $8 million is 96% growth year over year. Recreational revenues. Now, what does that mean? That's basically their B2C business, okay, selling to consumers. Recreational net revenues came in at $4.8 million. That's 53% growth year over year. Export, B2B net revenues came in at $3.2 million. That's 311% growth, okay? So nonetheless, folks, their business is absolutely tearing it up on the number side. Now, margins. What's going on with margins? Well, I can tell you they're improving quite dramatically. Overall gross margins of 34%, that's versus 23% in the past, as the company continues to withstand the impact of price compression and inflation. The company's gross margins slightly decreased when compared to its most recent fiscal quarter, Q1 of 2023, as a result of liquidating inventory produced by the flower group prior to its acquisition, right? So the way I think about it like this, like one, now that they're getting rid of all that old inventory, going forward now, their margins should increase based upon that. Second component of this is there's been a lot of price compression in the Jack Jackson space, we can call it that, okay? And what I see moving forward is that troughing out. We're like literally in a trough right now, and things are going to get better and better. What I've seen in this industry is a lot of weak companies have gone under, faced a lot of financial troubles, so they just liquidated product at whatever price, and I put a lot of price compression here. I do believe things get better from here. Kind of moving forward in future quarters. I could be wrong about that, but that is my belief, okay? And so we'll see how all that plays out. If that does happen and we're kind of in a trough period for price compression in this industry, we should see rationalization and we should see actually margins continue to increase for a company like Avon here. Now, risk factors, what happens with the stock, okay? So if they never get to profitability, let's say profitability gets worse, right? And let's say they start taking huge net losses again, and let's say the economy gets worse and, interest rates continue to go up and all that stuff, could it be a bankruptcy candidate? Sure, absolutely, right? I think that's a pretty low probability, but it's always a possibility, right? We always have to consider that with all these stocks. Now, on a good scenario, there would be a scenario where the company keeps kind of revenues coming in and gets to better and better profitability and gets this company to maybe $4 or $5 million of net income a year. If they do something like that, then the company can easily command probably about $100 million market cap at that time, which would obviously be about a 3x from here. Now, if they do great with this company, right, and they start pulling in revenues of, let's say, $100 million a year or something like that, and they can have $10 to $20 million hit that bottom line, then you start to talk about a company that would likely command a multi-$100 million market cap, right? We're not even talking billions. We're just talking about a several $100 million market cap. And so you can kind of see where those opportunities are, and it doesn't, the numbers don't have to be huge. Like literally, if the company's pulling in $10 to $20 million in net income positive a few years from now, I mean, my gosh, do you know where the stock price is? So we'll see what happens here. I'm pretty excited. I'm glad their numbers are all heading in the right direction. I can't get too excited about, any of these stocks because we've been let down so many times on kind of spec side the last, 2 years that we'll see what happens, but it looks like everything's headed in the right direction. Revenues, margins, profitability, everything's headed in the right direction that we want to see. It just needs to keep that momentum going, and we'll see if they pull it off. If they do, it's going to be a pretty, magical kind of situation here.